A good friend of mine today told me that when the Fed makes their first interest rate cut, he's going to sell all his stocks. And I just thought, oh my gosh, the financial news shows, social media, the internet, it is scaring the daylights out of traders and investors with absolute lies. I've shown you before, and I'll show you again. Nothing says that stocks go down when the Fed makes interest rate cuts, okay? As always, we're going to look at two things. I want to look at history, and then I want to look at what's happening in the present time to decide if it's right or not to be a seller when they start to make interest rate cuts. So here we go. Going back to when the Fed started a interest rate cutting cycle starting in July 6 of 1995, this is a monthly candlestick chart here. The stock market just essentially went up, and up for about 6 years after that. So selling then was a really bad idea. The next cutting cycle began on September 28th, 1998. And sure, for the last day or two of September, maybe stocks were down, but as clearly shown here, up, and up after that. The next rate cutting cycle began on January 3rd, 2001. We had literally just entered recession in hindsight, and we're only 2 or 3 months tops, again in hindsight, into a new bear market. So yes, then in hindsight, it was a good thing to be selling stocks at that point. The next rate cutting cycle began on August 1st, 2019. And yes, for about the next 2 months, the S&P 500 was down some, but after that, up very nicely. So then you wanted to hold, again, not sell. And the last cutting cycle began on September 18th, 2007, right before the Great Depression there. Stocks were up for about a month and a half, but then came down after that. So generally at that point, selling stocks was the right thing to do, again in hindsight. So turn off your television or don't watch the financial news shows, whatever you've got to do. But again, I have just proven to you that it is not a death sentence for stocks when the Fed makes their first rate cut. As I always do, the next thing I'll need to do in real time is look at all of my research when they do make the first rate cut and then decide what to do at that point. What do I think's happening? Is it a time to be a buyer, a seller, or just hold? And I won't know until that day, so stay tuned. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC. I love the community that we're building here together, and I couldn't do it without you. This is the union of people using their brains to get a better deal. And I am starting to notice real thinking and real comments here in the comment section. People starting to say, hey, okay, the history is interesting, but what about this thought? Or what about this thought? Somebody raised the issues of PE the other day, and I loved it. Honestly, it was something that I didn't think about. So here they are. Here are the different PEs going back to the last, that rate cut beginning in 1989. And simply looking at PE ratios themselves in a vacuum, I don't see anything, judging by the PE, that would make me think or not that it would be time to sell when the Fed makes their first rate cut here. Again, I think we're going to have to look at it in real time, but I love it. Continue to put your comments in there and let's come together. Let's think about it. Let's share the information. Now, again, be very careful, everybody. Do your own research. I did my own research here with the PE ratios, but it sparked my mind. I want to do other research. I want to go back to those points in time when we cut previously and look at where we were with the underlying emotions in the stock market. We're in the short term, medium term, long term. Where were we? That's one of the other things that I want to look at. If the PE ratio was a certain number, did it go up after the first rate cut or didn't go down? So it's really sparking me. It's getting me really happy, really engaged. I love this. So stay tuned. What do you think? Please leave me a comment. As far as my Chinese stocks go, which I own half of the stocks that I originally bought back in March, I could be a seller soon for 2 reasons. Number one, of course, I don't love the price action that's been happening. We can't get real demand back, seemingly. And because Chinese stocks haven't done well over the last few months, It is a lagging position in my portfolio. And as an investment manager, I can't hold on to these for too long because my clients start to get upset. So for 2 reasons now, I could soon be a seller of my Chinese stocks. A little bit of the same story with Bitcoin, in my opinion. Thankfully, it did get up to about that $64,000 range. But if it can't seem to confirm above, I could absolutely get out of my Bitcoin position because I think I can use the money from Bitcoin and Chinese stocks elsewhere that could make me more money. Hey, I can be wrong.